This is probably one of my favorite calculations, and this is exactly how to break down and understand what your true split is. Now, if you've never heard of what a true split is, I'm about to show you. But before I do that, you know the drill. Please like, subscribe, share. If this makes sense to you, just hit that little like button. If it is like, oh, I never even thought about it that way, share it with another real estate agent. And if you really want to do me a solid, hit the subscribe button. I put all of my content about real estate on YouTube for free. I used to go from selling really no real estate, selling maybe a house every other month, to selling more than a house a day. And I put exactly how I did it and what I do on YouTube for free because I was really broke and struggling. And I don't want you to be broke or struggling because it is way better when you're not. So here is what the true split calculation is. And this is actually a true story. Now, before I get going into the story, I just want you to know this is not a solicitation to join a team. This does not mean teams are better than brokerages or I'm trying to solicit my team. This is just raw information, zero bias, just giving you my 2 cents on what I've seen in the industry time and time again. So this actually happened where I was interviewing an agent and they said, Ramon, I love everything you do, but I just will not work for a 50-50 split. And I'm like, oh, okay, geez, sorry to hear that. Like that's, well, explain to me like the math on how you got there. And they said, well, I'm at an 80-20 split now, so why would I go to a 50-50? And so this makes a lot of sense because sometimes teams, right, the concept is like, oh, a team takes more of my commission, okay? And really, it's because agents don't really understand net profit. They focus on the big number, right? The GCI. But when it really comes down to it, I'm gonna show you how close these numbers actually are. So he says, I will not work for a 50-50 split. So I say, okay, I understand. Because in his mind, he's thinking, I bring in $100,000 of GCI, okay? Both scenarios, 100 grand. Here's 80-20, here's 50-50. Why would I go from 80 to 50? And in all fairness, that's a fair assumption, but that's not the end of the story, okay? So I say, well, how much do you spend a month? So I understand you get, but what are your business expenses? Oh, I only spend, I probably, now expenses are photography, any marketing you do, down to like business cards, open house signage for sale signs, photography for your listings, floor plans, someone to take up and put down your signs, lock boxes, any lead generation, referrals, your CRM, like anything you pay for in your business, right, is expense. You print out folders, flyers, anything, okay? And he says, oh, it's only $2,000 a month. Now, he says 2,000. I know agents to overestimate earnings and underestimate expenses, so I'm just gonna go with 2 grand, okay? 2,000 a month. So that means he spends $24,000 in a year, okay? So these are the expenses, okay? 24K. Now, team over here, and again, not all teams are created equal. I want to say that one more time. Not all teams are created equal. So this is not going to apply to every single team that you come across, okay? But in this case, it did. All of the things that this gentleman was talking about are covered by the team, okay? So this is a 0. Everything, the floor plans, the list, the transaction management, the listing coordination, the people that put up into your signs, take them down, the tech, the training, the coaching, the support, the office space, it's all free. That's just how we do our business, right? We make it very easy for the agent to not worry about expenses, 0 burn rate every month. And that's just how we do it, right? Not every team does it that way, but bear with me for the comparison. So the reality is that this person has a net of 50K. They don't have any expenses. Literally, their licensing, that's all on them. Same thing in this scenario, licensing, that's all on them. You pay for your own cell phone, your own gas for your vehicle, and your own laptop. Both scenarios do that. But all the expenses are paid for here. So now this person really is at 56,000. Okay, so if you compare these, this person, while they think they're at 80-20, the reality is their true split is 44%. Oops, that is a terrible percentage sign, so please don't laugh at me for that. Actually, you can go ahead and laugh. That was terrible. But and this guy is 50%. So the reality is we have a 6% difference between these two comparisons. So if you analyze your business this way, it's very easy to determine if a brokerage or a team, what's the better fit. But here are the things you have to know in order to do this calculation. You have to know what your costs of goods sold are. Okay, so cost of goods sold is anything that's related to the actual transaction. So photos for your listing, cost of goods sold. Your split, cost of goods sold. Transaction management fee per file for that file, cost of goods sold. Anything that's just for that particular deal, that's a cost of goods sold. Then you have to know what your expenses are. So your expenses are all your fixed expenses, right? So if you have a brokerage franchise fee that's monthly, if you have a desk fee, if you pay for Bomb every month, you pay for Dropbox, those are all fixed expenses. Desk rental, fixed expense. Because when you know those, it's very easy to look at these and go, okay, 6%, that's the difference. But a lot of times we only think the difference is up here. We think, why would I go 50 to 80 or 80 to 50, right? But that's not the true story. The true split is only a 6% difference. So in this case, we're only talking about $6,000 if you brought in $100,000 of GCI. So I may have went a little fast there, or that could have been super simple for you. But the point being is that when you take this understanding of true splits and apply it to the decisions you're going to make as a real estate agent on where you're going to hang your license and if you're going to join a team or not, knowing those different models and then comparing them the right way, you get to ask yourself this question. And I think this is like, if I can leave you with anything, this is probably the best question to ask anytime you're evaluating an opportunity in the real estate industry is, if I combine my resources, so what I have, my time, my energy, my contacts, right? My resourcefulness, like just me, if I combine everything I have, okay, past experiences, skills, whatever you want to call it, and I combine that with either the team or brokerage's resources, right? So whatever they offer, all their resources, I combine them. Do I create a bigger opportunity and faster? Okay, and keyword there's faster. So what I asked this agent was, hey, okay, no, I get it. I showed them this math. They go, oh, wow, I never thought about it that way. I'm like, I know. That's why I'm going to do a YouTube video about this. 6% is a difference. So $6,000. I said, hey, got a question for you. If you combine your resources with my resources, do you think we can make more than $6,000 together next year? We can do $106,000 in GCI? And he was like, absolutely. I said, okay, cool. Let's do it. He ended up joining the team, and he's making a lot more than his $80,000 or $56,000 net from the year before. But the point being is that when you know this equation and you can ask that question, combine resources, does it create a bigger opportunity and faster? And can I grow more than the difference, right? Because now if this difference was $60,000, that's a tough one, right? Like even $20,000, you just have to weigh it for yourself. But when this number is $6,000, it's like, that's a very easy decision to make in my opinion. But I hope this framework helps you. Number one, to actually know what you net out, what your true split is, and also helps you make smarter decisions when it comes to joining brokerages and joining teams.